Hi, this is Mark. I'd like to talk a couple seconds about crowdsourced venture capitalism. Now, before you get too crazy and start throwing bricks, hear me out. The idea here is you have people that are willing to lend, and the, the idea is there are just a few folks that are the actual venture capitalists that do due diligence, check out businesses, and they have their favorite picks. And people that collectively put their cash into the fund, they choose a venture capitalist to represent them. The public history of this venture capitalist is known. Might be a partnership, might be a firm, but the concept of crowdsourcing or gathering a collection from many people is not a new one. And the advantages of this type of thing is anybody can buy in. You don't have to be an angel investor, which means you have to have, $1 million liquid or something like that, and be willing to risk a couple $100,000. And you and your favorite 2 million friends can all get a stake in something that could be really cool. And you can afford to risk an amount that you like, and the partnership might have several different investments, so all your cookies aren't in one basket. Now, why increase venture capitalism? Why increase the funding? A couple of good reasons. Some of it's heavy-ended right now. Some of the limited partners are asset funds, and they're dumping just a huge amount of money into the area because they are forced by their investors to keep the value of their capital. But I think the guys who showed that it worked pretty well for them were the Travel Zoo guys. They gave out free stock in their company. They gave out a lot of free stock in their company. And they made it. And part of the reason they made it is because they had hundreds of thousands or something like that of people that had a stake in their company and wanted to see them succeed. Now, when you get a venture crowdsourced fund cooking, and you have 1 million people that want to see your company work and they like the idea, it's a very different territory than if no one's ever heard of you. So you have instant marketing, and you instantly have people that have a vested interest in your success, which that's a big part of how venture capitalism works. You get these guys that have networks and connections, and they have a vested stake in your business, and they want to see it work, so they help you out. Their resources become used to benefit your business, and those resources are not too minor. I mean, they're pretty important resources. And other people will tell you, well, if you have a business idea and you're making money, why do you even need outside investors? Well, it's sort of the way the U.S. economy has worked for the last 70 years or so. We keep borrowing and we keep building, and what we're building is usually what we're doing is building more value in our nation by borrowing money from outside sources. And there's some tricky economics going on as far as debt rate and some kind of coefficient that's sort of kept neutral with the government lending rate for bonds and the gross national product. If you look historically, it's only so low, unfortunately, that can go, and we've had some trouble the last couple of years, I'd say, maybe a little longer. And what you do is you're borrowing on your future success. And what that does is it takes capital now and improves the ability to make capital later. As far as our U.S. economy goes, it doesn't always work out because the people that are spending the money are not always choosing the best long-term investments. And there's a whole set of political arguments, but I don't want to get into them. But I am interested in the concept, and I like the idea of, getting people that have a stake in your business and borrowing money to build value in the future. And it's a long-term strategy, and it's a smart one. So the crowdsourced investment technique, well, you can in real time, get feedback about venture capitalist firms, and it can all be public and open and out there, and people can know who are the winners and who the guys are not so good, and their rates can be negotiated based on how good of a success rate they have. And most of the high functioning venture capitalists or venture firms, they'll get, a percentage will be big hits, and some will be kind of, medium, middle of the road, and there'll be a big chunk that just goes under. That's the way businesses work, and sometimes you don't know how valuable a product's going to be from the get-go. I just like the idea of much the way they opened up stocks to individuals with things like E-Trade and Ameritrade, stuff like that. I just like the idea of there being this group sort of investment in new startups and new businesses. And it's not just a matter of dollars, it's kind of a cultural change. You want the young people to see that, hey, we're interested in building more businesses for the future, and building effective businesses for the future. And we understand that things are going to change, and we support it. Not only because it pays off, it's ideally you're making money on your investments, but because it keeps the ball rolling. It keeps the capital from sitting around in an account somewhere or going the wrong direction. It keeps the fuel, the gas pedal pushed down on people that are hungry to build something and are willing to search out and find what they can do to provide value to people. And it's not just for our country. I mean, it's global. If you make some awesome products, you can sell them all over the world. It's the internet is showing us that a lot of businesses can scale globally. That's about it. Thanks. Bye.